In early February, Anthropic shared a blog post and a GitHub repo that evaporated nearly $300 billion in market capitalization from the stock market in a single day. Companies like Thomson Reuters, Adobe, Salesforce, LegalZoom, they all lost anywhere from almost 10% to in some cases greater than 20% of their stock value in a single day. By the end of the week, the market had erased nearly $1 trillion in market capitalization. People started calling it the SaaS Apocalypse. The headlines all read the same, that AI was coming to destroy SaaS. But that's not what's actually happening. What's actually happening is investors are finally starting to realize people like you and me can build SaaS products now faster, cheaper, and better than ever. Let me show you why this is potentially single-handedly the best opportunity that bootstrapped founders like you and me have ever had. If you don't know me, my name is Sean Boyce, and I've spent years building successful SaaS businesses. And now I'm sharing those lessons learned with you so that we can hopefully increase your chances of turning your SaaS idea into the business of your dreams. I need to take you through the timeline on this because it all happened fairly quickly. So going back to about mid-January, Anthropic launched Claude Cowork, which is an AI tool that can read files, organize folders, draft documents, more like an AI colleague, not just a chatbot, which most folks had been the most familiar with at the time. Then by early February, Anthropic quietly released a bunch of industry-specific plugins for Claude Cowork. I'm talking all kinds of coverage here. Legal, finance, sales, marketing, data, customer support, right, whatever. Really supercharging the capability of Claude Cowork. Wasn't a huge announcement, but the subsequent blog post and then the affiliated GitHub repo really started to make some noise. In the following few days, that's when nearly $300 billion was wiped out in about 48 hours. The Goldman Sachs Software Index, which tracked things like this, dropped 7% in a single day, which is the single greatest drop since the tariff crash. And then by the 6th of February, Anthropic had launched Opus 4.6 with agent teams. I also created a video on that, so if you haven't seen that yet, go check that out. More selling, market continues to crater, S&P, Global, Moody's, NASDAQ, they all are tanking. By the 16th of February, over $1 trillion in software market cap had been erased. Allow me to introduce Exhibit A here, which basically is our list of victims thus far with regard to the SaaS apocalypse. Now, these are all enterprise SaaS type companies, and their stocks are down double-digit percentages anywhere from the entire year down to a single day, as this disruption has just been dramatic. To really put this into perspective, we could take a look at what some of the analysts are saying about the SaaS apocalypse. One referred to enterprise SaaS companies as department stores. Another, Goldman Sachs, has said that enterprise SaaS companies are like physical print newspapers today. Think about that. Everyone's saying the same thing about the SaaS apocalypse, that AI is killing SaaS. But I think that framing is just wrong. Nobody's going to use AI to basically replace Salesforce next quarter. I think the SaaStr guys have a pretty good perspective on this. It's like, no one's going to use Lovable to create a CRM to replace their Salesforce instance, right? That's just impractical. So let's take a look at what's really going on here. So what we're really seeing is the death of the per-seat model in real time. If you're unfamiliar, for greater than 20 years at this point, enterprise SaaS companies like Adobe and Salesforce and HubSpot, they've charged per seat per month, which meant that as their customers grew, because they hired and their workforce got larger, the enterprise SaaS company made more and more revenue. However, that's all been flipped on its head now that we have AI agents, which are 10 times more capable than before. So if you need 10 AI agents instead of 100 employees, that means that you need 90% less seats for your enterprise SaaS company, which means that that heavy bloat that all these enterprise SaaS companies have accrued over years and years of leveraging this model is about to come crashing down and hard. Everyone, analysts, headlines, YouTube finance bros even, they're all looking at this only from the perspective of the investor, as in which of these enterprise SaaS company stocks do I sell, which ones may survive. They're not asking the question which matters the most to us, which is, if these SaaS giants are vulnerable, who fills the gap? And that's where you and I come in. Here's why people like you and I are the threat, and that this is our moment. Enterprise SaaS products are the Swiss Army knives. Salesforce has been around since 1999. They've had 25 years of feature requests, acquisitions, scope creep. The average enterprise SaaS product has hundreds of features. Most users touch maybe 10% of them, but you're paying for all of them. Meanwhile, a bootstrapped founder with Claude Code, Lovable, and a weekend can build a surgical instrument, one tool that does one thing perfectly for one specific audience. A CRM for solar installers, a billing tool for small law firms, a compliance tracker for craft breweries. Right? Vertical SaaS grows 2 to 3 times faster than horizontal SaaS because it solves specific problems more deeply. Now I'm going to show you the numbers that are scaring the crap out of investors. So the old school approach to building a SaaS business was something like this. You'd hire a team of maybe 5 to 10 people. You need to raise about $2 million. You would ship probably in 6 months, maybe longer, and you'd have a burn rate of about $50,000 a month or more. But then you'd need at least 500 customers to break even, which, as you can imagine, usually took a while. Now, switch gears to modern day. You can build a SaaS product as a solo founder with just AI tools. You could spend probably less than $1,000, ship in a week or maybe a couple of weeks, have an overhead that's almost or near zero, and need basically 50 customers maybe in order to be profitable. And the Micro-SaaS market has got a pretty strong projected growth rate. So today it's around 15 billion. That's expected to grow dramatically to potentially over 60 billion by 2030. That's a 30% compounded annual growth rate. Lot of opportunity there. Solar founders are already hitting relatively straightforward 5K to 50K MRR with their various bootstrap SaaS product ventures. And they're still capable of achieving those 80% plus profit margins because there's no VC pressure and they have dramatically lower overhead. So the SaaS industry is hitting 465 billion this year, give or take a little bit. But that growth isn't going to be coming from the Salesforces of the world anymore. It's going to thousands of tiny, focused products run by people who can move faster than any enterprise team ever could. When Salesforce charges $150 per user per month for an enterprise CRM, the assumption is that it took hundreds of engineers, years worth of development, and massive investment in infrastructure to justify that price. But when a solo bootstrap founder can turn around a vertical SaaS using AI in a week for hundreds of dollars, what justifies that price? This is called a pattern of disaggregation. I'm going to break this down for you with some examples. I'm focusing on the bottom portion of this slide. So for example, we used to have physical print newspapers. Well, what do we have now? We have thousands of niche blogs and newsletters. We used to use taxis on a regular basis. Now we have Uber and Lyft and thousands of other micro-mobility options. Another example you could look at is cable TV, which ultimately was majorly disrupted by companies like Netflix. And then thousands of streaming services. Now individual creators on YouTube are consuming a lot of that content. Enterprise SaaS is the next domino. The big platforms become the infrastructure, and thousands of bootstrap founders build the actual products people want on top of that infrastructure. This is why Anthropic and OpenAI are winning while Salesforce is losing. They're not competing with SaaS, they're becoming the operating system that you use to build better SaaS. Claude Code, agent teams, Codework, these are your tools, not enterprise tools. The AI companies are arming the bootstrappers. So let's talk about how you as a bootstrap SaaS founder can capitalize on this once-in-a-lifetime opportunity. Pick a vertical, not a horizontal. Don't build a CRM, build a CRM for property managers. Don't build project management. Build project management for construction crews. Right? The deeper you go, the harder you are to compete with. Enterprise SaaS can't go deep. They serve everyone. You serve one person perfectly. And target those bloated incumbents. Find a category where companies are paying $100 to $500 per seat per month for software they hate. Legal tech, compliance, financial services, healthcare admin, these are all being disrupted right now. Every one of those Thomson Reuters and LegalZoom customers is looking for an alternative. Use AI to your unfair advantage. Context engineering, not vibe coding. Use Claude Code, Cursor, Lovable to build at 10 times the speed of a traditional team. Your cost advantage is your competitive advantage. If it costs you $100 to build what cost them $100 million, you can price at 1/10 and still be wildly profitable. Price for outcomes, not seats. The incumbents are scrambling to figure out how to move away from per seat pricing. You don't have that problem. You've never been locked into it. Price based on the value you deliver. $49 a month for a solo attorney to recover billable hours is infinitely more compelling than $500 per seat per month for a bloated practice management suite. Ship fast, stay lean, and then compound those advantages. Your biggest advantage is speed. While Salesforce spends 6 months navigating internal politics to ship a single feature, you can ship it this weekend. While they're doing market research, you've already talked to 20 customers and built the thing they asked for. The SaaS Apocalypse is not an apocalypse for you. It's a starting gun. $1 trillion in value just got repriced. That money is looking for somewhere new to go. And it's going to be to the founders who are faster, leaner, and more focused than the incumbents ever could be. And that founder can be you. Thanks for watching, guys. Subscribe if you want to see more content like this. And if you're ready to start building, check out my free 5-day email course, which I'll link in the description below.